Good morning, everyone. Paul Duncan here with GammaEdge. Today is Thursday, the 5th of May, Cinco de Mayo. Go ahead and stop the presentation here. Read this. It's important to you. It's important to us. When you get done, go ahead and hit the play button. Overall, taking a look at the indices, as expected, we had a continued monetization of puts. We had the calls increase for the SPX, the SPY, the Qs, and a little bit on the IWM. Key takeaway here is that call demand did not increase appreciably, but nevertheless, when we take a look at the SPX, for instance, we did see a very marked increase over for some of the positive gamma here. When we take a look at that in general, still net negative condition across the board. Puts are still dominating. The slopes here matter, so take a look at that. And then, of course, the black dot shows where we are in relation to all of that. Taking a look at the near-term expiries, kind of an exciting setup here in the SPX in that we have to hold 4,300. If we don't hold 4,300, we're going to get back into the zone that I'm pointing to here, and that becomes pretty much directionless between the goalposts, etc. When we are above one of these dominant GEX levels, in this case the positive gamma level, these calls are in the money, and although this is a cash settled index, this is a condition where we may see some monetization. Monetization of calls typically results in downward pressure, so we're going to want to watch that. The SPY is a little different. We're below this primary level here at 431, and the zeros at 425. You can see it's also fairly messy. We did not clear yesterday's transitions that we had between the goalposts. Same thing here. If anything, they grew on the SPY. This is a messy setup. Because of that, then we're expecting this loose action as we stay in this area. It's going to be back and forth. On the Qs, below negative gamma here, as you can see, 330 is the key level there. Again, the zero sitting down here, fairly clean on the way down, so watch that zero. Watch this positive level at 330, and we'll see where we go from there. IWM, clean structure, but just overall broken. You can see we do have, for the expiry, have more calls coming off than we have puts. You can tell that by the slope of the green line here. And what this is telling me effectively is that if we do see monetization, remember the SPY, the Qs, and IWM are equity settled, we're going to see a push downward back into that no pressure zone where the zero is. Taking a look at the gamma history, large bars, of course, is what we saw because of the FOMC move. But I will note when we see zero GEX dropping like we're seeing here, that typically portrays a potential of a downside move because calls have been closed and puts have been added. Generally is what that indicates. In this particular case, the SPY does fit that condition. We did see some noise. We do plot this intraday, so you see back and forth noise as positive GEX came down, as the zero came down. It did return, appears to be back up here at this level, so not a lot of pressure on the Qs to go in one way or the other, and we don't see anything on the put side here. On IWM, we actually are seeing that continuation of the negative gamma, negative GEX, and because that did not move up or move down, and we didn't really get much of a change here, yes, the zero dropped minor amount, maybe some puts were added here or calls were closed, but in general, not really seeing anything on IWM. When we take a look at the flow summary, actually the SPY did not participate like you would think with the price movement that we saw yesterday. Huge price movement up, but we actually had puts going in, and they stayed in. Calls were relatively flat on the day, if nothing else. They were closed into the close. This is actually a bearish condition, bearish setup on the flow yesterday for the SPY, so watch that. After FOMC drop of the puts, they were added back in. Calls were added, kind of a net on that, so we'll have to watch that. And then there just really isn't any signature here on the IWM, so don't read anything into that. Taking a look at the market model, we failed our continuation, but we did end up higher yesterday. So the FOMC did break us out of that downward kind of wait and see mode that we were in. We need to see this continuation today in order to have any confidence to go long in the market. Until then, play the downside. Overall, we're still very negative and very bearish. Taking a look at the structure, we jumped from down in this area to way up here yesterday, and now we're at the top of the transition at 4,300. You can see where this last pennant of positive gamma, net positive gamma, is at 42.15. Below that, we are in a negative condition. I will note we jumped from the auto scale here from 5K to 10K, so we are starting to see, because we moved up, the emergence of positive gamma here. So just be aware of that. 4,400 is the next major line in the sand to the upside. Big change here. We about halved the monthly gamma that we saw. Part of that was the move, of course. Part of that is probably a closure of what was down there in the put structure. When we see this positive structure here and getting weaker, we could see a little bit of downside pressure here. We'll have to wait and see, but in general, going into the monthly, very weak. These did flip sign. They are now on the positive side. Any monetization or balancing here is just going to be kind of a fade into the monthly. So watch for some flows, just the standard reduction in vol flows. Vanna is how people characterize that. Theta decay, etc., etc. The one DTE that we're looking at here, this is the DTE net positive, fairly strong. This is for tomorrow, of course. We're sitting here at 4,300, where this is the transition zone shown here by square 6, negative below 42.35 here on the way down. 4,200 is what we're watching to the downside. To the upside, you can see these different levels here. The delta levels go back and forth, so we could see some pushing upwards towards that 43.25, 43.30 area. Doubtful we'll make it up into the 43.50 area. Anything's possible, of course, like we saw yesterday. And then that high range would be 4,400. Just not expecting on the 0 or the 1 DTE to push aggressively here. Not a lot there. 4,300 is the line in the sand. You can see that as the dominant call expiry, as well as the dominant negative or positive GEX expiry. Taking a look at the combo, very large net negative. It's halved about what it was yesterday, and you would expect that obviously with a move up. Key levels are shown here. I won't belabor those. Here's the transition, almost the same zone for transition, which indicates there's just a lot of little pressure in here, right? So back and forth, back and forth. These zeros are good hiding places in the overall SPX complex. To the downside, there's that 4,200 again. To the upside, 4,400. You can see a pause here at 43.50 if we were to get up into that area, and you can see the deltas are still very, very red up here in this area. Down here, a little bit messier, and then the overall range that we're expecting here, open, high, low, close, is between the two blue lines. So what's the checklist look like for today? On the upside, we're in that 3-day continuation, no question. Wing charts are showing a drop in the puts and the addition of calls. Always good for the bulls. We are sitting right at or above transition in the SPX complex. That means if you believe gamma and prices are interlinked, any move upward will see the opening of calls, and that'll start pushing us upward. We'll just have to see that. If we do get a continuation move in the CT, I would look for 43.16 towards 43.30. 4,400 is possible, as I said, but I'm not expecting it. And you can watch the flows through these commands on our Discord. On the bearish side, which is kind of where I'm sitting here, the cumulative tick is still in this long-term downtrend. Lack of upside calls in the terms of flow. And we're in these dominant negative structures, I think kind of points us still on the bearish side. A fall back into those transition zones, really below 4,300 down to about 42.45 or all the way down to 42.25 or so, really sets us up for pushing lower. The plays, if we do move up towards that 43.16 area above 4306, which is another zone that I'm looking at. I think we can play the downside. I think we'll get sticky in this area. I don't expect us to spend much time up in the 4330 area, although it is a possible. If we do move up and then pull back, watch for break downside into that transition area, and I think we'll be rudderless, just back and forth noisy all the way down to 42.45. Did update the levels. I did not put the ES in here. I didn't have time to do it. The key takeaways here, you can see the 4306, 4316, 4330 pushing upward. A lot of downside levels, which have become support to a certain degree, are beginning to build. So we're kind of at that transition zone, and we'll just have to watch it. So that's it for today. Come join us at GammaEdge.us. That will take you to a sign-up page. Once in that sign-up page, you'll get access to our Discord, and that'll be a 14-day free trial. All the tools turned on. Great group of traders. Urge everyone to come in, kick the tires, and see how you can apply this to your overall style. Follow us on Twitter at GammaEdges with an S, and then of course you're watching this off YouTube. If you like today's content, hit that like button, follow us so you get notified the next time we post something. So with that, make it a great Thursday, and good luck to everyone.